All right. So for my investor portfolio project number 2, I decided to make a video in my Excel spreadsheets of the people who I was going to have all the information here for you. So I'd like to make a short video just kind of going through and explaining all the information that I have here and what strategies I think that this couple should take. So it is a married couple. They're 44 years old. Owns here. It's a structural engineering business. Living at home. Their income stream is very stable. He always has work. He's always bringing in additional revenue for the family. I just put a current net worth of 1.5 million based on like their current assets and some of the information that he gave me. It's kind of a rough estimate. I wouldn't accurate. And then I just cash on hand, probably like around $30,000. They explained to me, they didn't give me the exactly which stocks they're invested in, but I know at one time they were invested in gas stocks and it didn't do very well, so they pulled out of the market, and since then they haven't really invested in stocks, but they've only invested in 401k plans for both him and his wife. And they have 75% invested in the 401k, and then they have around 25% invested in real estate and other financial assets. And they currently just purchased a new home, so they still owe around $500,000 mortgage on the home. And I'm just going to skip right down to it's a $1.2 million home. Some of their future career plans, from what they explained to me, is by the time that they're both 65 or close to retirement, 15 years from now, they want to have over $5 million each in their retirement accounts based on their current spending habits, which should give them enough to be comfortable until. So they're currently right now each have around $300,000 invested in their retirement portfolios or their 401ks. The wife holds a riskier 401k. It's and a little bit more in less amount of time than her husband, but now currently they both have around $300,000. Just a quick note that she explained to me that around 20 years ago she was thinking about Amazon and investing in Amazon when he wanted to invest in the gas stocks, and they would have had well over $40 million if they had invested what they had invested in the gas stocks 20 years ago to where Amazon's price is today. So I thought that was kind of funny. So I listed out what I feel would be a good strategy for them, given their current age, if they want to retire at 65, giving them about a 15-year window. And so they could retire by 2038, pay off their home by 2038, pay off all debt by 2043, and after their retirement, they could place earnings into a. So this is where I kind of get into the. Given their current age, I think that they should have it into a low risk investment portfolio, something like S&P 500 index funds, bonds, things that are lower risk given their current age and the amount of wealth they've already accumulated, them to gain additional capital on their current investments. So got the portfolio spreadsheet here. So I have an ETF index fund through Vanguard with a beginning investment of $200,000. And the investment strategy is known to have an annual increase of 10% per year following the S&P 500. I could, if you add up both of their 401k accounts currently, it's around $600,000. So they could start with that and just continue with that rolling into their 401k. Then I have government bonds, putting $100,000 into bonds, and bonds are known to have like a 5 to 8% return per year, and then they gain the entire amount back, depending on who they loan the money out to. And so they currently don't own an IRA, but I think Fidelity maybe would be a good company to go into at $200,000. And then, so I have all that. And down here, I have the spreadsheet giving the compounded rate per year, the starting amount that they're going to invest in. And for the ETF index funds, they have the $200,000. No additional money was deposited. So they just keep going with the $200,000 every year. They don't add to it each year. And by year 15, that $200,000 is expected to grow to $9,000, $500 there. 401k, they just have the $600,000. And I put that they're going to continue to add to it an additional $10,000 per year. And so you see here the compounded rate plus $10,000 per year keeps it growing at a pretty fast rate, the highest actually of all the retirement accounts that they're going to be investing into. And by year 15, their $600,000 has the potential to grow into over $2 million, depending on the rate of increase per year. Sometimes it could be more, sometimes it could be less. And then we have the government bonds. I have that it's just growing per year, compounded, nothing special. And that by year 15, I mean, if they go all the way out to year 30, depending on how much longer they work, you could see significant gains. But since they are older, I wouldn't expect them to work more than 20 years given their current age. But that's expected to return $226,000, which is pretty good. And then the Roth IRA, I have that there's an 8% return and that they will include $5,000 per year into the Roth IRA. And I do understand that it is taxes are taken out so that at the end of the however long they want to invest for, they can just deposit it or withdraw it from their Roth IRA account with no taxes or fees involved. There may be some fees, but if we move on to the next page, to the graph and the final analysis, we can see that if they want to meet their goals, and this is a safer, the gains are a lot smaller, whereas somebody at my age would want 50, 60% growth per year, maybe even higher, 100%, depending on the stocks, because I have such little income right now that those gains would help me do a new position. Whereas they're in a good position right now, so 8 to 10% annual growth is still really good over the next 15 years for them, and they can easily meet their goal to retire for their retirement accounts. So if we take a look here, at year 15 for the 401k, it's expected to grow to $2 million. The ETF index around 800,000. Roth IRA 360,000. Bonds 393,000. Now I don't expect them to work till year 15. I do, since they are in their 40s. I mean, and if they want to retire when they're 65, they can go another 20, 22, 23 years, and that would put them in a lot better, let's see, 25 years here. That's in just their 401k. And then if we include all the other accounts, then we our goal. Now they could be a little more aggressive around investing in their ETF index fund. Right now, they don't have any additional capital going into it per month. I mean, if he's averaging $300,000 plus per year from his business, I think he would be able to set some aside, allowing that ETF index fund to grow even higher over the next 15 to 20 years, which would definitely allow them to meet their goal. This graph I have down here is just based off of how much they would have if they went the full 35 years. And I did include the taxes for the ETF index funds, 401k accounts, and in the end, they should be looking at around 17.6 million if they were going to go the full 35 years. But since they're going to be doing about half, I could see a $7.5 to $8 million increase in their retirement accounts. And ETF index fund, I feel they could easily reach their goal of $10 million. And so this is some of the advice that I gave them, and we talked it over. A lot of people are speculative when it comes to investing in the stock market. And so, I mean, I did explain to them I'm a financial analyst. They should take my, but it was general that a lot of people have seen success with over the years. And given their situation, I feel this is the best strategy for them to meet their retirement goals. So that's my presentation for you guys. I hope you enjoyed. I really had a lot of fun making this project myself, just because it makes me more aware of where I want to be in the next. I'm only 24. I could work till I'm 65. I have quite a bit of ways to go. Why not take some let it grow, and just while meeting my financial needs from my family, aside, live accordingly to where I have enough money that I'm not spending it on consumable products. It's going to benefit me in the long run. So thank you guys. And yep, that's my presentation. Thanks.